Welcome back to Bite-Sized Business, the channel where we use financial ratios and metrics to gauge the financial health of companies. In today's episode, we will take a bite into another U.S. state, this time Arizona. We have 4 companies on the menu today, the 3 largest in Arizona, and a special mention. Today's options on the buffet are Southern Copper, Republic Services, and Freeport-McMoRan, as well as the special mention Avnet Electronics. We also have some honorable mentions that did not make the buffet line, but still are notable companies nonetheless. We have Axon, the controversial inventor of the Taser, and Carvana, a disruptor into the traditional car dealership model, as well as the special mention Avnet, a distributor of electrical and computer components. To start on the deep dive into the companies, we will take a look at Southern Copper. Southern Copper's history starts in 1952 when it was founded, but the company today is the result of an acquisition of Southern Peru Copper Corporation in 2005. And in 2018, the company was spun off by parent company Grupo Mexico, who still owns 89% of the company as a fully owned subsidiary. This is similar to the story behind T-Mobile that we did a few videos ago and how they are a fully owned subsidiary of Deutsche Telekom. This is often done as the U.S. has very favorable tax structures for companies, and the American subsidiaries can often grow at a faster rate and end up being larger than the foreign owner. In this case, Southern Copper is worth nearly 2 times the value of Grupo Mexico's stock listing. Looking at the second company on our list, Republic Services, we see a different tale. Republic Services was a subsidiary of Republic Industries, now called AutoNation, the owner of many car dealerships and rental agencies. But that was spun off in 1998 following the parent's shift into the automotive space. Republic Services is now the second largest waste company behind Waste Management. The company's only notable acquisition came in 2008, where it bought larger company Allied Waste for $6.1 billion. This made the combined company second again behind Waste Management. The third company is Freeport-McMoRan. The company started as Freeport Sulphur in 1912, but following expansion into developing a town and infrastructure, they incorporated as the Texas Freeport Company in 1913. In 1955, Freeport was given $100 million by the U.S. government to build a nickel and cobalt mine in Cuba. The project was worth $119 million. That extra $19 million paid for by Freeport-McMoRan. However, in 1960, Fidel Castro would nationalize the mine and give no compensation to Freeport-McMoRan. In 1981, Freeport Minerals merged with McMoRan Oil and became Freeport-McMoRan. In 1997, IMC, which is now Mosaic Fertilizer, purchased the sulfur business from Freeport for $750 million. In 2007, Freeport would acquire Phelps Dodge for $25.9 billion, and in 2012, Freeport would spend $20 billion acquiring 2 oil and gas companies, and McMoRan Exploration Company and Plains Exploration and Production Company. The final company on today's list is Avnet. Avnet started in 1921 selling radio supplies to the public, but expanded after selling antennas to the U.S. during World War II. The company had a brief stint in the music industry, owning Liberty Records and Blue Note, as well as Guild Musical Instruments, who manufactured the Guild Starfire 12, a 12-string guitar used by both John Lennon and George Harrison of the Beatles. The company first went public in 1961, and in 1973 they became Intel's first distributor. In 2019, Avnet announced it would accept Bitcoin as payment and had already accepted a few multi-million-dollar deals with crypto as payment. Taking a look at the main course, we can review some of the details we went over before. The first company on the list is Southern Copper, who trades under the ticker symbol SCCO. All companies today are based in Phoenix, Arizona. Southern Copper is in the materials industry and has a market cap of over $88 billion. Revenue in the last 12 months stood at around $11 billion, with EBITDA of $6 billion and net income of $3 billion. Total debt sits at just under $7 billion, with liabilities sitting at around $9.5 billion. Assets around $18.5 billion, which leaves us with an equity of almost $9 billion. Free cash flow in the last 12 months stood at $2.5 billion, and the company paid out $1.86 billion in dividends. However, the company did not do any buybacks in the last 12 months. Taking a look at Republic Services, we can see they trade under the ticker symbol RSG, and they consider themselves in the industrials industry. They have a market cap of $65.7 billion, and they did revenue just shy of $16 billion in the last 12 months. EBITDA came in at $4.66 billion and net income at just shy of $2 billion. Total debt for the company sits at $12.8 billion, which is the majority of their liabilities, which sit at $20.6 billion, and assets sit at $31.8 billion, leaving us with total equity of $11.23 billion. Free cash flow in the last 12 months was $1.9 billion, and they paid $673 million in dividends and $406 million in stock buybacks. Looking at Freeport-McMoRan, we can see another company worth $65 billion, this time in the materials industry, who trades under the ticker symbol FCX. They did revenue of $25.6 billion, EBITDA of $10 billion, but only net income of $2 billion. Total debt sits at $9.68 billion, with liabilities sitting at $26.5 billion. Assets sit at a whopping $55.4 billion, leaving us with a total equity of $28.9 billion. Free cash flow sat at $2.1 billion in the last 12 months, and the company paid out $865 million in dividends and $59 million in stock buybacks. Now looking at the special mention Avnet, Avnet is an electronics company that says they're in the information technology sector. They have a market cap just shy of $5 billion, but revenue of $23 billion. Their EBITDA is much smaller, sitting at $847 million, and net income at $350 million. Total debt sits at $3.2 billion, with total liabilities sitting at $7.5 billion, and total assets at $12.6 billion. This leaves us with a shareholder equity of $5 billion. In the last 12 months, the company has done $655 million of free cash flow, has paid out $112 million to shareholders in dividends, and $240 million in stock buybacks. Looking at the employment of these companies, Southern Copper employs around 16,000 people globally, Republic Services 41,000, Freeport-McMoRan 27,000, and Avnet 15,500. Taking a look at the ratios, we can see that Southern Copper has a low debt to equity of under 1, but it's still in that neutral set, coming in just above the 0.75 we look for in that range. They have a low debt to EBITDA of 1.15, a very high EBITDA margin of 55%, and another high net profit margin of 28%. And they did not do any buybacks, so we have no percentage out of free cash flow or net income. Taking a look at Republic Services, we see that they have a debt to equity of 1.14, which is in our neutral range, a debt to EBITDA of 2.75, a high EBITDA margin at 29%, and a high net profit margin at 12%. They also do a strong amount of buybacks, as of 21% of both their free cash flow and net income. Taking a look at Freeport-McMoRan, we see a very low debt to equity of 0.34, a low debt to EBITDA of under 1, sitting at 0.96, a high net profit or high EBITDA margin at 39%, and a middling net profit margin at 8%. Stock buybacks were only 3% of free cash flow and net income this year, but that was down from the previous years where they did, I believe it was $1.5 billion 2 years ago. Taking a look at the special mention Avnet, we see a low debt to equity of 0.63, a high debt to EBITDA of 3.76, a low EBITDA margin, and a low net profit margin. They do, however, do a lot of buybacks, being 36% of free cash flow and 68% of net income. So looking at these numbers, we have for Southern Copper neutral debt to equity, low debt to EBITDA, and a high EBITDA margin, high net profit margin. That pretty much guarantees them a green light as they have pretty much the best metrics we could look for. It's the same story for Republic Services, being neutral in the debt space but high in a profitability space. Again, the same story for Freeport-McMoRan, being low in debt, high in EBITDA margin, and neutral in a net profit margin. Looking at Avnet, it's a little different. They do have a very low debt to equity, but they have a high debt to EBITDA and a low EBITDA margin and net profit margin. I do think the company is in a good space, being in the electrical components space, as we shift towards more renewable energy and more electric vehicles. They'll probably start picking up in revenue and profit a little more. But for the time being, I'm going to have to give them a yellow light. Now, moving on to the totals, we can see the four companies have a combined market cap of $223 billion and do revenue of $75 billion, EBITDA of $21.6 billion, and have a total net income of $7.3 billion. Total debt sits at $32.6 billion between the four companies, and liabilities at $64 billion. Assets sit at a whopping $118 billion, leaving us with a total equity of $54 billion. Free cash flow for the four companies was $7.2 billion, with dividends being about half of that at $3.5 billion, stock buybacks at a lower $704 million, and the companies combined employ almost 100,000 people. If we look at the revenues as a percentage of GDP, we see that the $75 billion in revenue is about 15% of the state's $508 billion. Now, it is important to remember that just because it is 15% on paper, that does not mean they are actually 15% of the state's GDP, as these companies all work on a global scale. I hope you enjoyed this video, taking a bite into the companies in Arizona. And if you enjoyed this video and haven't seen the previous video on the largest companies in Alabama, I ask that you go watch that. It is a similar video with some similar topics, and I think you'll really enjoy it if you enjoyed this one. Again, thank you for watching, and if you enjoyed, please like, comment, and subscribe. Thank you.